but it's lower than it was in February 2021. So
wow,
like that's 3.5 years,
jeez.
you know, and we're actually lower than February 2021. So that's kind of like a reality check for people to say, well, prices always go up. Well, they haven't gone up in 3.5 years.
The real estate crash in Canada is here, and I got my good friend John Flynn here to talk about what's going on. So John Flynn, how are you doing?
Pretty good. Trying to make a living here. You know, things are pretty slow. Got to be creative these days.
Yeah, I've heard. Yeah, very slow, I've heard.
I'm thinking I might have to start changing my tune over here, you know, pumping the market a bit or something. Yeah,
yeah, interest rate cuts, immigration's at record high. Come on. All right. Yeah, so check out John's channel. I'll leave a link in the description, and we're going to go through some of the recent data that has just come out for July. The CREA is so slow, but John has compiled a lot of data for this video, so thank you, John. So we're looking at the national average residential sales price. Looks like it's going down after those interest rate cuts.
Yeah, we had, well, so before the speculation before, of course, we had a good spring. Not as good as last spring, mind you. The two humps there on the right. The second one is the most recent spring this year, and the last one is 2023. And the big spike there is 2022, obviously. So yeah, not as good as last spring with all these rate cuts finally going to happen. So that's a big indicator right there that it was all fluff. Then you look at, of course, it's decreased. The price has decreased. Now this is seasonal, but again, we heard when interest rates go down, the prices are going to go back up, and they're going to go to the moon and everything else. And many people are still talking about this, and we'll get into that in a bit, I'm sure. But yeah, we went down, what, 29,000 in 1 month from June to July this year, 4.1%. So, and that's like almost 30,000. Like that's a big drop in 1 month, but it just goes to show you how volatile the market is, right? It's like Bitcoin, right? Nobody knows where it's going to go. It could go to zero, or it could go to 500,000. You know, we really don't know, but you know, we can probably predict a little easier with the real estate market because we have a lot of history to go by. So
yeah, that's kind of crazy as well, because if you also add inflation on that, you're at what, like 6.8% real price decline, and that's if you believe the fake CPI. But yeah, that's absolutely crazy, 4.1% down in a single month. And obviously we heard this narrative that rate cuts are going to come and everything's going to boom, and it's been more like, from what I've heard and seen in the data, it's more like it was a boom from the sellers in terms of the sellers listing after the rate cuts. Is that kind of what happened?
Oh yeah, you know what? It's all propaganda. It's all fear, right? And the agents are just pushing the fear. Not all agents. There's a lot of good agents. I always say this, but the narrative from the loudmouths out there is, it's always like, what are we gonna say to get people to buy a house from me? And you know, I've talked to agents personally. I just cringe. I can't even say anything. It's like when somebody has like the opposite political views and you're in a conversation and you don't want to start an argument, right? You're just like, I'm just gonna walk away, right? Like, it's like, we're not gonna see eye to eye. And they've just been trained. Some of them use it as you know, a sales propaganda pitch, a fear, and it's a fear-based pitch, which isn't a good thing to do, or a good tactic to use on people. But other ones are just trained like puppets, and they just hear it from other agents, and they say that. I was watching this boat video, and this guy was talking about the boat market, and he was talking, oh, look how good these boats are, and he said, well, when the interest rates are coming down, you know, the boat price is going to go back up again. And again, nothing against any like economic downturns, like that's not going to affect the boat prices when the economy, you know, slows down and we have negative growth, real negative growth, right? Instead of this whatever, this positive growth that they're pushing out right now, we all know is a lie.
We can't bring you this content without the participation of our sponsors, and I want to thank Moomoo for sponsoring today's video. So in a climate where interest rate cuts are happening and central banks are amassing more and more gold, you can invest in things like gold ETFs and also things like long bonds, which basically benefit from interest rate cuts as interest rates decrease on long bonds. Obviously, with investing comes risk, and with Moomoo you're able to see premium financial news, so you're always up to date on what is happening. With Moomoo's comprehensive trading platform, and you're able to have more insight and more knowledge with what's happening with the price. With low fees and transparent pricing, Moomoo is one of the lowest cost trading platforms that's available right now. Also with zero commission ETF trading. If you use my link in the description of this video, you can get get up to $2,000 worth of commission rebates if you make a deposit of just $100. You will receive a $50 stock cash coupon. If you deposit $2,000, you'll get an additional $200 stock cash coupon. My special deal is only for you guys. Link is in the description if you want to check out Moo. And once again, thank you to Moo for sponsoring this video.
But yeah, it's the propaganda is, you got to be careful about the propaganda, because there's a reason behind it, and who's telling you this, right? Your parents aren't telling you this, right? Well, some parents are, because they listen to the wrong people. But again, it's the salespeople that are telling you, the fear, the FOMO based reasons why things are going to go up.
Yeah, no, that's totally true. I mean, it's herd mentality when it comes down to it for most people. I mean, you see it everywhere, and when you really start noticing it, people just follow each other. And if enough realtors are saying, yeah, the market's going to go up, immigration is booming, they all start to believe each other, right? It's kind of self-fulfilling in a way, but it does, well, it's not self-fulfilling because it doesn't actually happen, but it's absolutely
It did
crazy.
happen. I think that's what makes it believable, right? It's that we did see that happen, and there was a reason for it, and this is why they're still pushing it, and people, they can't believe that maybe it won't go up always. Well, it can't go up, right? It's like not affordable, right? So how can it keep going up unless we're like literally like just the only way it keeps going up is if we keep squishing into smaller and smaller places that we're renting, and I just don't see that happening.
No, people want space, and it's already crazy how crammed in they build these houses, as you're seeing all over your region. I've seen it in the Calgary area too, and all over Canada. It's even worse in BC, where you've got all this space, then they're just not building on it. Well, they're not building big lots. Like now you just walk out your backyard and you got a garage there, or like you've got an 8 feet, 6 feet deep yard.
Moving on, sorry, quickly on that same chart, but the second one down there, the reality of the situation now is when you look at July 2024, we're at $667,000 for the average price in Canada, which is absurd, but it's lower than it was in February 2021. So
wow,
like that's 3.5 years.
Jeez.
And we're actually lower than February 2021. So that's kind of like a reality check for people to say, well, prices always go up. Well, they haven't gone up in 3.5 years. So it's that's the reality of it, right?
Yeah, that's crazy, because again, like if you think about the amount of inflation that we've had, and let's say real talk here, you and me, John, we know inflation personally over the past 2-3 years has probably been like what, 30-40%, let's say 30%. So you tack that on to the nominal loss, and that's just a crazy decline. And I still remember, as probably you do as well, in 2021 when everybody was saying how great an inflation hedge buying real estate was against all this money printing that was going on.
Yeah, there was always that time in the market, not timing the market. And it's like, yeah, okay, don't worry. You the house you bought at the peak in 2022, it was great timing there. Don't worry about that. Just hold on to it for the next 25 years, and I'm sure you'll be ahead by that point. It was funny that I did a post this week. I'm just bringing it up now, and it was about the inflation with house prices here. Let me just get it. So in my city, the average residential price, this is in Niagara. This is actually, sorry, in Niagara region, not even just my city. In 2024, so far, is just under $700,000. Okay. And in 2014, it was $261,000. That's a 167% increase in 10 years. Now, you compare that with inflation, right? What's inflation? Like you said, even 50%. Like, it's way off of what the reality is with house prices. And again, it's because you had inflation, which they would have went up, and then you had speculation on top of it, even more speculation than inflation, like 3 times the amount. So wages went up 35% in Canada at that point. So
yeah, that's crazy. That's what really matters. And yeah, when debt's growing, but that's what you have when a bubble happens. And that's what's kind of funny, because that's how you define it. You could have high real estate prices, and if everybody's wages had shot up in the Niagara region, maybe that would make sense to a certain degree, but not at the insane levels that we've we've got. And it's so simple to break it down like that. And I feel like a lot of people overcomplicate it when it comes to bubbles. It's just purely that simple, man. If wages are going up at 10%, real estate prices are going up at 20%, it's a bubble. Like,
oh yeah,
something's going on. Eventually it gets to a point, right, where they can't even make the payments on the amount of leverage that they've got, and they get to a point, it's like a margin call, and it's always the same cycle. Recession comes, and that's what puts it to head. And yeah, here we
squeezed now. They're getting squeezed now, right? It's all, well, you know, you've seen charts after charts, like the most mortgage renewals, they're coming out in 2025, right? In 2026, like you're going to see massive amounts, and those are 2025 is only back to 2020. So second half is when the after the pandemic started. After the second half of the year, interest rates were pretty much zero at the Bank of Canada, and of course a lot of purchasing happened. 2021, so 2026, that's going to be like the apocalypse of mortgage renewals.
Yeah, I think you're right. Yeah, it's going to be interesting to see, and I think whatever interest rate cuts that we see are going to be offset by unemployment, because that's going to be why they're using it for cover to cut rates. And that's sort of what they're doing at the moment. They're saying, hey, the economy's kind of more weak than we expected. And this is the thing, the Bank of Canada, the Fed, they're always behind the curve. Like, they don't have a clue what they're doing. And I don't think without massive amounts of stimulus and huge amounts of subsidies from the government, I don't think this market's going to be booming anytime soon.
even with the stimulus, it's not going to be, because again, that's part of the cycle too, right? It's just the taps. They just keep turning them on and off, right? It's just and there's a lag time though, so it's going to take a couple years for those taps to be turned on for it to catch up to the economy, which we're just getting started.
So I've got the chart up on the screen at the moment where you show it going back to 2021. Obviously, you had that initial drop, which started after the rate hikes began. And what's hilarious about that, again, is let's go back, because people have short-term memories. When they started increasing rates, we were at like what, 1.5%, and prices were down like 15-20% at that point.
You know, they dropped 100,000, and like after, I think it was 1.25, maybe it was 1.5, but like they dropped significant amounts. So that drop is bigger than any gain. Look, there's no gain as big as that drop in those charts. Like everyone, they stagger up or they stagger down. That's just, it was $187,000 is what people lost in that drop from the peak there.
Jeez. And that was during times of high inflation as well.
Oh yeah. So you throw in some inflation on that.
Yeah, the real chart would look even worse. It would be practically probably back at 2021 levels after that drop. But so this is kind of crazy. So you've got, it comes up again 2023. I'm guessing that's the spring market where that first hump is.
Yep.
Okay. And then you've got the second hump, which is obviously this year. And you're not even breaking the top of last year's price. So you're still at a lower price. And that's not even adjusted for inflation. So you add inflation on that, you're even worse.
So we're seeing lower lows, right? Which is a big, technical analysis kind of thing that people talk about. We are seeing, you could say we're seeing we're seeing lower highs and we're seeing higher lows at the same time, which is kind of the opposite. But when you put that into I talk about them all the time. You talk about like analysis tools. It's like some pennant in there that's, going to break to the downside because it started from the upside. So yeah, it's no matter which way you look at it, and no matter how you overlay this, it's breaking to the downside. Like there's no way, there's nothing to say otherwise.
No, no, I totally agree. The economy's only getting worse. And then now I've got the sales chart up. So this is total sales for July, and it doesn't look good.
No, so the total sales in Canada, there's the national sales numbers, and they're 6.5% below the long-term average, which goes back to 2007. This is all the data we have, and it was like 41,200 or something. We're at 38,000 sales right now, and but you got to remember, if you look back, we have millions more people than we did, in the beginning of this chart. So I've done sales per capita, and I will do it again in the future. Actually, keep keep an eye out on my Twitter, because now it's hard to do until I like to get to the end of the year to kind of do a, you know, big analysis on it. But yeah, like our sales per capita would be at all-time lows right now.
Right. Yeah. You're totally right, because and this was the thing that was going to make it boom, John. This was all the narrative around it when it was rising. It's just there's so many people, there's just all this demand.
Well, so let me tell you. So, and correct me if I'm wrong in the comments, anyone, please tell me I'm wrong, because I you know, I don't think I am. So first, the narrative, when the rates were going to get cut, they were like, well, or sorry, when the rates started going up, they said you need to buy a house now before they go up even higher, right? And then the rates got to the top, and they were like, well, you need to buy a house now in case they go higher, in case they change their mind. And then they talked about lowering the rates, or they talked about the pause, and they said, well, you need to buy a house now before they start cutting rates. And then they started cutting rates, and they said, well, before they started cutting rates, they talked about cutting rates, sorry. They said, you need to buy a house before they start cutting rates. It's like I can't even keep track. There's like all the excuses that was used. So now we're at the point, right? So they've cut the rates. Now they're like, well, you need to buy a house now because they're going to cut rates even more. So it's just like, it's like, and then when they get to the bottom of the rate cutting cycle, they say, oh, you need to buy a house now before they start increasing rates again, right? So it's just nonstop, right? It's just like, whatever the excuse is, it's just buy a house, right? Like that's, you know, no one ever says, well, a few people do, I do, maybe you should relax and maybe you should wait and maybe it's not the right time, because there's still FOMO out there. There's still a lot of FOMO because they've been abused by the system, by the market, and they're, you know, they feel they need to, because it's going to happen again. I'm going to come back. I'm going to get another slap. You know, it's never going to stop the punishment. So and they got to just like trust in the market and the cycles, and, you know, and until people are selling out there, which they already are, but you don't hear about it en masse yet. You know, then people won't want to buy a house. You're gonna be like, now's a great time to buy a house. I'll be saying it, and they'll be like, I don't know, John, it's it's not a good investment.
Well, yeah, that's so true, John, because the economy will be really bad at that point, and then people will be like, man, I don't know if I want to buy a house right now. I don't know if I'm gonna have a job. Like, it gets really bad like that. I mean, I remember back after the global financial crisis, trying to get even a part-time job just after college was like, it was a mess. Like, I applied for hundreds and hundreds of jobs, and there was hundreds of applicants for part-time retail jobs. In fact, the only place that was hiring all the time, this is a tip to all of you out there, was McDonald's. So if everybody isn't hiring, McDonald's will be. But I worked there one shift, and then I handed in the uniform. I was like,
and that was after college, you said?
Yeah.
So, wow, because me after college, like, it was no problem. I got technical jobs in my field. I was like, I hate these jobs. I'm gonna spend 10 years to work my way up the ladder. So I like quit and started real estate.
Yeah. Well, that is part of the problem too. But yeah, actually thinking about it, they won't even have that problem in Canada, because I mean, there's so many immigrants coming in, and they're all after those part-time jobs, the students and everything like that. So those are the jobs that they're lining up for down the street, as you probably seen. It's like something like the Great Depression, and people are like, I feel like we're at this point right now where the recession is starting to touch like the lower and middle class, and people higher up the chain are not touched. So they're looking around and they're saying, I'm still good, so everything's fine in my world. I'll go ahead, buy that RV, buy that boat. And yeah, it's just, it will affect them eventually. It's just working its way down the line. So I guess we'll see what happens there. So I'm gonna flip over to inventory now. So this is interesting. So inventory going up again. You're up to the highest year of inventory now since 2019.
Yeah, so this is inventory, months of supply, whatever you want to call it, on the national scale, just for July. So these are all the Julys back to 2010. And you can see July again this year. Last year, we were a little bit below 2022, but you got to remember there was a flood of inventory that came on after those rate hikes started, and prices were dropping, and there was a little bit of a panic there. But now things have kind of normalized, but we're normalized to inventory increasing to where it should be. So we're at 4.2 months nationally now. And yeah, look, you have to go back to be pre-COVID 2019 to get something higher. And that was 4.7. If we were at 4.7 now, it would be like a huge deal, and we'll get into that now in a second. But again, yeah, it's very clearly consistently rising now year over year. So it's a good sign for all the buyers out there, all that pent up demand. I don't even, there's no such thing as pent up demand. So I'm going to retract that statement. That's why I made a funny sound when I said it. But there's demand, or there's, no demand. There's no pent up demand, because if you're selling gold bars for $10, of course there's going to be pent up demand for $10 gold bars, right? So there is pent up demand, or demand, right? Forget about pent up, for affordable houses or somewhat affordable housing. There is no demand, as you can see, for overpriced homes. And the only demand I think that was for overpriced homes was the speculators, and they're all gone. And now it's people that are in the market, or people that have been gifted down payments that kind of squeeze their way in. But the average Joe out there, there's no demand, or so-called pent-up demand.
And also you've got low sales, right? So even though the inventory is going back up, you've got sales in some places I've seen that are at like the lowest level since the 1990s.
Yeah, and you still have, like, there is still that denial. We're not in the fear stage of the asset bubble, right? We're still in the denial phase, where people are still holding on, investors primarily, because those are the ones that influence the supply in the market right now. Unless, a bunch of old people just drop dead tomorrow, which could happen, who knows? But that generally doesn't happen. But investors are the one, and speculators are the one that control supply, and they're still holding on, just like people hold on to various assets, hoping it's going to go back up and I can break even. But at a certain point, and it's a fine line between holding on and fear and panic, and so we're pretty close to that stage, and it takes a long time, especially these real estate cycles, right? But it is on the timeline it should be, with interest rates, and all the rest of those things that we watch. So yeah, you're going to see, again, it is, and it's crazy to think of, with all these new people, 1 million people a year plus coming into Canada, we're going to have increased supply. And look, we have, the numbers don't lie here. Since 2022, we've had over 2 million people, resident, permanent and non-permanent, it doesn't matter, they still need a place to live, and we have more supply. So yeah, like, again, at what point in the future is it going to eat into our supply? It's not eating in yet, because they can't afford it.
No, and if you go to any new construction place, they are building at a snail's pace right now. And that's even in hotter markets like in Calgary. You've got the building, which is just ground to a halt, essentially. There's no demand because the prices are so much higher than if you go on the used market. Who's going to buy? Who's going to buy a single family home for $800,000 when they can go buy it for $700,000 on the used resale market? Like, makes no sense.
And I was just talking about that on my last video, where you have all this rental supply from the investors, and they're like offering bonuses. Actually, I just did a quick browse. I wasn't like browsing through, but I was just getting my screenshots for the video, and everyone on the side had like the thumbnail apartment, whatever it was, and it was like bonus, like their bonus is a free month's rent, free utilities, whatever they were offering to rent these places out. And it's like, when you're offering, incentives, this is when things are slow. Like, we see the builders around here, they're offering big incentives to try to sell their units, increase commissions, appliance packages to the buyers, whatever they can offer, they're offering. And because the last thing they want to do is drop the price too much, because all those old clients are going to come back and say, hey, look, we just bought this house 6 months ago for, $50,000 more, and now you're selling it. And I'm sure the same thing is going to happen with tenants. And that's what a lot of people don't understand. When the rental market gets saturated, especially in places like Calgary, the tenants that have moved in 6 months ago, they're going to be eyeing up those properties that they see the price reductions on. And in a year or so, in 6 months when their lease is up, they're going to say, hey, you know what? I can get this other unit for $300 less, whatever the case may be. And I don't know exactly what point they're at in Calgary now, but I've heard there is price reductions on those rental properties that are sitting.
Yeah. This is the end of part 1. If you want to watch part 2, then subscribe to the channel or check out the podcast channel. And if you want to check out today's sponsor, Moo, check it out in the links in the description below. I will see you in the next one. Take care.